It's Thursday, August 20th, 2026. You're listening to the DX Today AI Daily Brief. Today, Stripe strikes a multi-billion-dollar deal for the marketplace that routes traffic between AI models. Google takes an option on more than $12 billion of Marvell stock as custom silicon deals reshape the chip market. And SpaceX reportedly reached for a second AI coding company, only to be told it isn't for sale. Let's get into it.
Stripe has agreed to acquire OpenRouter, the marketplace that routes developer traffic across hundreds of competing AI models. Stripe confirmed the deal on its newsroom on Wednesday. Neither company disclosed a price, though reports put the figure somewhere above $7 billion, making it one of the largest acquisitions in the payments company's history. OpenRouter sits in an unglamorous but strategic position. It is the switchboard developers use to send a request to whichever model is cheapest or fastest at that moment, and it meters and bills for every call. That metering layer is the part Stripe wants. The company has spent the past year arguing that AI agents will need to pay for services on their own, and OpenRouter gives it the plumbing to charge for them.
From payments to silicon.
Marvell Technology disclosed in a securities filing that Google now holds a warrant to purchase up to 58 million of its shares at just under $207 apiece. Fully exercised, that stake would be worth roughly $12.2 billion. The warrant accompanies an expanded commercial agreement covering custom chips tied to Google's Tensor Processing Unit ecosystem, running through fiscal 2033. Marvell shares closed up nearly 10% on Wednesday. The structure is telling. Rather than simply buying chips, Google is aligning its suppliers' equity with its own build-out, a pattern now spreading across the industry as hyperscalers lock in custom silicon capacity years in advance. For Marvell, it completes a sweep of the major cloud providers.
Now to the desktop.
Meta has released a dedicated Meta AI application for the Mac, its first desktop client for the Assistant, currently in beta. The app adds two features the browser version could not offer: window and screen sharing, so the Assistant can see what a user is working on, and system-wide dictation that works across other applications. That puts Meta directly alongside the desktop apps from OpenAI and Anthropic, which have had a head start of more than a year. Reviewers were mixed. Several noted the Assistant still trails competitors on reasoning and coding tasks and pointed to a default setting that allows conversations to inform advertising, something users have to turn off manually.
Privacy makes a move.
OpenAI previewed a feature it calls private safety processing, aimed squarely at enterprise customers nervous about where their data ends up. The idea is to detect abuse and policy violations without retaining eligible business and application programming interface customer data at all. The timing is not subtle. Anthropic recently told customers it would require 30-day retention for certain advanced models, a condition some regulated industries simply cannot accept. OpenAI is offering the opposite promise and marketing it hard. The caveat, and it matters, is that this is a preview for selected customers rather than a blanket guarantee across every product. Still, it signals that data handling has become a competitive front, not just a compliance checkbox.
A takeover attempt denied.
Bloomberg reported Wednesday that SpaceX approached Cognition, the startup behind the Devon coding agent, about an acquisition. The talks, according to that reporting, are not active. Cognition's chief executive Scott Wu responded publicly and bluntly, saying the company is not for sale and that no discussions had been taking place. Elon Musk endorsed that denial. The context makes the approach plausible even so. SpaceX closed its roughly $60 billion purchase of Anisphere, the maker of Cursor, less than a week earlier, an unusually aggressive move into AI software development for a rocket company. Whether Cognition was a genuine target or an exploratory call, the episode underlines how quickly consolidation is moving through the coding agent market.
Banks adopt a forecasting model.
And International says 3 of the world's largest banks, Citi, HSBC, and Standard Chartered, are now using its Falcon time series transformer model to manage foreign exchange risk. Deutsche Bank and Barclays are also named among partners. The model, now in its second version, forecasts currency movements and cash flow timing for corporate clients, an area where treasury desks have historically relied on rules written by hand. Citi first piloted the system with airline customers, hedging ticket revenue across dozens of currencies. What is notable here is not the technology so much as the adoption. Conservative institutions rarely put a forecasting model from a Chinese fintech into production, and several of these banks compete directly with Ant's parent.
Memory money returns to shareholders.
SK hynix announced a share repurchase and cancellation program worth 40 trillion won, roughly $29 billion, one of the largest buybacks in South Korean corporate history. Shares rose between 9 and 12% on the news. The scale is a direct read on how much cash the AI memory boom is generating. High-bandwidth memory, the stacked chips that sit beside accelerators in AI servers, has moved from a commodity business to a supply-constrained one, and SK hynix has been the primary beneficiary. The company is effectively telling investors it has more cash than it can deploy into capacity. That is a striking statement in an industry that has spent 2 decades apologizing for cyclical losses.
Data becomes the asset.
Nvidia is in discussions to invest in Mercor, the marketplace that recruits doctors, lawyers, and other specialists to produce expert training data at a valuation of around $20 billion. The talks were reported by The Information and have not been confirmed by either company, and no deal terms are settled. If it closes, it would mark another step in Nvidia's strategy of investing across its own customer base. It also reflects where scarcity has moved. Compute is expensive, but buildable. High-quality expert judgment, captured in a form a model can learn from, is harder to manufacture, and the companies that can supply it at scale are being valued accordingly.
A quieter funding round.
Prevalent AI has raised $22 million in growth investment led by Integrity Growth Partners. The company builds what it calls a trusted data fabric, software that assembles a reliable picture of an organization's assets, systems, and relationships so that AI tools have accurate context to work from. It grew up in cybersecurity, where knowing exactly what you own is the whole job, and now plans to extend into broader enterprise risk and expand in the United States. The pitch reflects a pattern many firms have run into. The model is rarely the problem. The failure point is that nobody can tell the system, reliably, what the organization actually looks like.
Enterprise platforms everywhere at once.
Cloudera introduced Cloudera Anywhere Cloud, a platform for building and running data and AI applications across public clouds, private data centers, and the edge, with an agentic co-pilot that automates workflow steps. The company is pitching it at organizations that have discovered their data cannot legally or practically move to one place. Regulated industries, in particular, end up running the same workload in 3 jurisdictions under 3 sets of rules. Cloudera's argument is that agents will be useless in those environments unless they can operate wherever the data already sits. It is a less glamorous claim than a new model release, but portability is emerging as the constraint that decides which enterprise deployments actually reach production.
And a political problem grows.
President Trump told reporters Wednesday that data centers, in his words, could use a little public relations help while defending the economic benefits they bring. The remark landed in the middle of a genuine political shift. Local opposition to data center construction has spread across the United States, driven by electricity prices, water use, and the observation that these facilities employ relatively few people once built. Pennsylvania's governor signed an executive order this week imposing new conditions on such projects. What began as a permitting question is turning into a durable local politics issue, and the industry now finds itself doing something it has never had to do before: persuading neighbors.
One more from Beijing.
The AI marketing technology firm Tec Do announced from Beijing that it has completed a new financing round, led by Huatai General Atlantic, with participation from Forbright Capital, GAC Capital, and GSR Ventures. Terms were not disclosed. Tec Do builds automated advertising and customer engagement tools for brands expanding outside China a category that has drawn steady investment as companies look for ways to run campaigns across many markets without proportionally many staff. The investor list is the interesting detail. It pairs domestic growth capital with a global private equity partner, a structure Chinese technology firms have used increasingly to keep international expansion plans funded through a tighter market.
That's your briefing for Thursday, August 20th, 2026. For DX Today, stay curious.